Energy markets showing a slight uptick this morning. Prices actually fell late last week on fears that higher for longer rates would hurt future demand. Joining us right now for a look at the oil markets and the rest of the commodities is Daan Struyven. He is head of oil research at Goldman Sachs. And Daan, thanks for being here.
Good morning.
All right, we know that oil prices might struggle a bit if rates are higher for longer, the theory being that demand would be cut because those higher rates would hurt the entire situation. But what's the demand situation look like? What's the supply situation look like right now?
Yeah, great. So on the demand side, I would characterize oil demand globally as still pretty solid, especially in India and the US. But at the margin, we're seeing some misses in China. And I do think that has to do with the fact that relatively high oil prices relative to natural gas prices are incentivizing, for instance, Chinese trucks to switch from oil to gas. On the supply side, I think the story of last year, where supply growth outside of core OPEC is strong, continues to be the case. Last year, the US was surprising to the upside. This year, it's really about Guyana, Canada, and then perhaps surprisingly, again, Iran, where we're continuing to see increases in supply.
Let's go back for one moment just to the demand picture. If you think the weakened demand in China is from people switching to EVs, that's something that sticks around. That's not a one-off up or down in demand. That's demand that's gone.
Yeah, so we're seeing both switching from gasoline to EVs, but it's a very gradual process, subtracting about 150 KBD or so from demand growth in China on an annual basis. And then the other switching I was referring to was switching from oil to natural gas, trucks that can actually use, for instance, LNG. Because gas prices globally are very low.
But again, that's when you're switching, whether that be EVs or to natural gas, that's demand that's gone. That doesn't come back. On the
EV side, I guess we don't have a lot of history to see whether drivers have perhaps moved back to traditional cars. But it's true that, for instance, on the natural gas price side, we look for bear markets in global and European and Asian gas prices from basically 2025 until the end of the decade, because we're expecting so much additions of global energy, both from the US, which is bullish. Henry Hub, US gas price is 25.
So you're not talking demand pictures, you're just talking about production writ large.
So we're actually seeing negative spillovers from the bear markets in natural gas to demand for oil. So if natural gas is cheaper, that reduces demand for oil and increases demand for natural gas. But taking a step back, I would say outside of these switching effects, which are important but not huge, I think global oil demand continues to rise at a solid pace, around 1.5 million barrels per day. Have
you been surprised that oil has stayed below $80 a barrel, basically?
No. About a month ago, we highlighted that $85 per barrel for TI and $90 for Brent is likely going to be a ceiling because there's a lot of spare capacity. More than 6% of the global oil market is currently in spare capacity. And the second reason why we think that 85 for TI and 90 for Brent is a ceiling in most geopolitical and economic scenarios is that if you look at global stocks data, they have been roughly flat to slightly higher over the last year. In fact, over the last few months, we have seen meaningful increases in global inventories data in the oil market.
Let's talk copper. It's at the highest level we've seen in a couple of years. What happens next?
So we think that after a 20% price rally from February onwards, that we're going to enter a consolidation phase for a few months. But then we think that the next leg of this multi-year bull market will continue, starting in the middle of the year, with copper rising to $12,000, and so another 12% upside from here by year end.
And that's mostly demand?
It's a combination of strong demand, for instance, even in China, although the overall macro data are mixed and oil demand is mixed, we saw 7% demand growth in China for copper in the first quarter. The economy is becoming greener, electrification. And then on the supply side, we are seeing very significant supply shocks, a big mine in Panama, for instance, that's no longer operating, and we expect global copper mine supply to peak in 2025 in an environment where demand should grow structurally at a solid pace.